Welcome to The Explainer. Today we're taking a wild trip into a world that looks a whole lot like our own, just, slightly hairier. We are going to decode the complex, chaotic, and sometimes downright terrifying financial systems that we navigate every single day. And we're going to do it by looking at the jungle economy. From earning your very first leaf to surviving systemic market crashes, consider this your ultimate survival guide.
All right, so here is our roadmap for navigating this financial jungle. First, surviving the banana inflation. Second, the jungle debt trap. Third, bubbles, crypto, and AI. Fourth, taxes and banana trade wars. And finally, number 5, recessions and depressions.
Okay, before we get in too deep, let's lay down some ground rules. In our jungle economy, monkeys use leaves to pay for, absolutely everything. But here's the catch. The leaves themselves are just currency. They don't have any real use. The bananas, on the other hand, those represent the actual tangible goods and assets that monkeys want to consume. Bananas hold true intrinsic value. Keep that in the back of your mind because it literally changes how we view everything else today. Chapter 1. Surviving the Banana Inflation.
So, inflation isn't just some magic invisible force, right? It's actually driven by 4 distinct engines. You have demand pull, which is when every single monkey suddenly wants bananas, driving the price sky high. Then there's cost push, where a supply issue means there are just fewer bananas available to go around. You also have production cost inflation, where the fertilizer or the seeds become way more expensive for the farmer. And finally, monetary inflation. That happens when the jungle government just prints way too many leaves, making each individual leaf worth less. Now, you might be wondering, what if the price tag of your favorite jungle snack hasn't actually gone up? Why do your weekly groceries still feel like a massive ripoff, even when the leaf cost stays exactly the same?
Well, welcome to stealth inflation, or as it's commonly known, shrinkflation. Instead of explicitly jacking up the prices, these giant guerrilla corporations, they kind of trick the everyday monkey consumer. You hand over your full leaf, but then you open the package and find you've basically been sold half a banana peel. Or maybe some leftover scraps rebranded as a brand new premium product. You're paying the exact same amount of leaves, but you're getting significantly less actual banana.
Moving right along to Chapter 2, the jungle debt trap. Listen, not all borrowed leaves are created equal. On one side, we have manageable mortgages. If you handle them correctly over, say, 15 to 30 years, they actually allow a monkey to build equity and a tangible asset, like a home. Now, compare that to the massive student loans young apes take out just to go to the jungle university to learn fancy big brain words. That right there, that literally translates to a death pledge. They end up shackled to this massive liability for decades without actually holding a tangible banana to show for it.
And honestly, here is exactly where the trap snaps shut. Let's say you borrow 100 leaves from the monkey bank. If you miss a payment, the bank doesn't just slap your wrist. No, they add a 2% compound interest charge. But here's the kicker. It's not 2% of the original loan. It's 2% added to your new, bigger debt every single day. This snowball effect rapidly spins completely out of control. It becomes mathematically impossible for the average monkey to escape if they fall behind. When that compounding debt gets completely unmanageable, the everyday monkey really has no choice but to throw their hands up and just declare bankruptcy. And when a monkey defaults like this, the jungle government steps in and forces them to sell off all their hard-earned assets. The cars, the tree houses, everything. All just to pay back the monkey banks. It is a devastating financial reset.
Chapter 3. Bubbles, Crypto, and AI. Welcome to the speculative jungle.
Okay, let's map out the life cycle of a financial bubble, because a bubble happens when the price of a banana goes way past what it's actually worth. It always starts with discovery, where a shiny new asset hits the market. Then comes mania. FOMO, the fear of missing out, kicks in hard, and monkeys actually start borrowing leaves to buy bananas just to hoard them. But eventually, reality sets in during the panic stage. Monkeys remember that bananas are meant to be eaten, not stored in a vault forever. And finally, the crash. Everyone tries to sell at the exact same time, prices plummet to half a leaf, and the leverage monkeys who borrowed to invest, they lose absolutely everything.
Which brings us perfectly to the very modern phenomenon literally known as aping. This is when monkeys get so caught up in that mania phase that they blindly throw their leaves into highly volatile digital assets, like crypto, completely ignoring the risks. A single influential monkey sends out a tweet, and thousands of apes rush to invest without doing a single second of research. That leaves them incredibly vulnerable to scams and rug pulls, where the creators just take all the leaves and run for the hills. And we are seeing this exact speculative behavior right now with the current AI bubble. It's a stark contrast, really. On one side, you have a real artist monkey producing work with true intrinsic value. On the other side, what the sources call an AI slot bull. Basically, a hyped-up bot that produces incorrect writing and fraudulent drawings. It only looks like a business genius because massive tech corporations keep dumping billions of leaves into it to keep up appearances. Not to mention the servers it runs on require an unbelievable amount of water just to stay cool. It is pure hype over actual intrinsic output.
Chapter 4. Taxes and Banana Trade Wars. Let's talk about funding the jungle.
Okay, let's completely dismantle one of the biggest myths about taxes out there. A lot of monkeys think that if they get a raise and move into, say, a 22% tax bracket, all of their leaves are suddenly taxed to 22%. That is entirely false. It's a bracket system. You pay 0% on your first 10,000 leaves. Then, you only pay the 12% rate on the specific batch of leaves in that middle tier. You only ever pay the 22% rate on the leaves earned at the very top. Understanding this simple fact keeps you from fearing a raise in the jungle.
But, domestic taxes are really only half the battle. Global geopolitics can absolutely wreck your wallet too. Take the bendy bit of Hormuz. It's a narrow, highly contested waterway. A massive 20% of the entire world's banana exports travel through this one tiny geographic gap. If a conflict breaks out and those ships are blocked, it creates an immediate global supply shock. Suddenly, the cost of simply moving bananas skyrockets, and that causes massive cost-push inflation across the entire jungle economy.
And that brings us to Chapter 5. Recessions and depressions. We really need to understand the difference between a bump in the road and, well, driving right off a cliff. A technical recession occurs when the total output of the jungle, the gross domestic product, shrinks for 2 consecutive quarters. Basically, the leaves are just moving around slower. Businesses pull back, some jobs are lost, but a depression, that is a total systemic failure. The leaves are moving way slower for years on end. And as the definition highlights, monkeys are just fundamentally very sad.
So how does the depression actually form? Let's look at the Great Banana Depression. The crash in 1929 wasn't just some sudden random lightning strike. Look at the timeline. It was the inevitable result of a massive post-war boom in 1918, which was followed by an entire decade of unchecked low-interest borrowing in the 1920s. Monkeys were taking on leverage they absolutely could not afford. When Black Tuesday hit in 1929, the panic selling wiped out half the wealth of the jungle. By 1933, a staggering 1 in 4 monkeys was unemployed, and thousands of banks had completely vanished. To wrap up this explainer, I really want you to take a hard look at your own financial jungle. Based on everything we've talked about today, from stealthy shrinkflation and the compounding traps of debt, to the wild manias of aping into hyped-up AI and crypto, I have to ask, are the assets you're currently chasing holding true, tangible intrinsic value? Or are you just caught up in the hype, holding onto a bubble that's just waiting to pop? Keep your eyes open, stay focused, and happy navigating out there.